Good morning, everybody. It's Chris from Serene Education with the four majors analysis update for the 17th of July 2013. Okay, apologies for not having the video out yesterday morning. Unfortunately, I had some computer problems, gremlins in the desktop, which needed to be sorted out, and I apologize for that. However, let's crack on with the four majors this morning. Start with euro against US dollar on using our FX Ultimate 8 template. This indicator boxes are here just to also confirm sentiment. And what do we have yesterday? Well, eventually we saw a lot of indecision the last couple of days, and that all taking place above the 38.2. And I mentioned as long as we saw that happening, there was always more likely for upside to be the case. And sure enough, we got a nice bullish engulfing candle yesterday. However, trading into the weekly fib here at the 38.2 mark, and subsequently not closing any higher over the Asian session last night, you can quite clearly see that prices pulled back. Very small trading range, not a hell of a lot went up on last night on the Asian session. So it's imperative, ideally, this is what I'm looking for, is for a daily close above that 38.2. I do need to see, if this is to be genuine sentiment for the euro against the US dollar to be going higher, I do need to see this 38.2 being breached. Because while we were still trading in this, it was very much a consolidated range. And it was far better if we actually had price trading above or below ideally the 38.2 here, the weekly, or the 38.2 on our monthly, the long-term support and resistance. The fact that she was trading above, over the past couple of days, above the 38.2 here, the blue line, which constitutes my monthly, was one of positiveness, because it's trading above the monthly high, so it's got to be good, which happens to be the major support and resistance level that goes back to the 2010, 2009 year. So very positive. Even though it had been pulled back, it's still maintained above that level. So it was still positive. And as I mentioned yesterday, which you guys unfortunately didn't get the video because of the issues I had, we saw more price action on the upper end of the wicks. A lot of trading, a lot of uncertainty, but most of that price action at the end of the close of the day was happening at the upper band of the actual total range on the candles. And it's still maintained above the 38.2. So as long as it's maintained above there's always likely for price to take a stance of bullishness. And sure enough, we got a nice move to the upside yesterday for euro against US dollar. However, capped by the 38.2 now on a weekly. It's imperative we do maintain it. It's still staying above all the moving averages here on the daily, which is good. Looking at an indicator box, there seems to be more positiveness coming through now. The R squared, in particular on the intraday, is starting to complement, but it's complementing a bit of negativity as well. So it dropped to our 4-hour time frame. Let's have a look. There we go. You can quite clearly see that price on the 4-hour broke higher, pulled back. However, the past couple, the 8 hours or so, we haven't seen that genuine continuation. She's fallen back again. The last 4-hour candle, very indecisive indeed, is spinning top. So, testing this area here. So, ideally, if anything, would like to see a nice big bullish engulfing candle on the 4-hour, but we would need to see that confirmation close and trade higher. So let's look to see if there's anything out today that could actually move price higher. As long as we can finish this week off with price euro trading above the weekly 38.2 year, that will constitute us that next week, or for the foreseeable the following week, we could actually trade a lot cleaner air, a more directive, less hesitation. You can see on the 4-hour here, it should be in this area here. It's above the institution as well. Everything's looking fantastic. It just needs to get above the 38.2. The longer she trades within the 38.2, the more consolidated it tends to look. So it's imperative we get a nice close above this area. So look for a nice daily close, 4-hour close. If you're getting a 4-hour close, guys, just be aware that you've got to see a 4-hour support candle to follow. We've seen so many times, especially with the US dollar Japanese yen, or the US dollar Swiss franc in particular, where we've seen prices moving quite aggressively in one direction. However, the following day, it's moved in the total opposite direction and taken everything out. So very, very important. A daily close above 38.2 and a continuation candle, like a breakout pullback and then a continuation candle, would suffice that we should be looking for further upside. If that's the case, the next target from where we are now to the next target, which will be our daily fib here at the 23.6, is a good 166 pips away. And there's less price action, there's less things here to impede price movement. So very, very important. Moving on to sterling against US dollar, and here again, still trading within this consolidative range. We saw a nice bounce on the major support and resistance here, the 14,8,500 mark. Still trading below the monthly fib retracement area here at the 23.6, which is a very negative sign, because this is the fib level or support level that goes back to 2010, as I mentioned. So it's also trading below the weekly fib here at 23.6 here at the 1502. So it's still negative for this particular pair. No swing highs. Ideally, if you're looking at daily and you want to see price now looking positive, you want to see swing highs. This bullish candle here after Bernanke's announcement headed straight into the 23.6 on the weekly, and we've seen price consolidating since. A lot of spending tops, dojis, etc. Trading within the daily range now, the fib range. I've taken the high that we've seen recently of this downside trend to the lows, and you can see that the 23 and the 38 price has been consolidating between these 2 points. And the 38 complements the 23.6 on our weekly. So a lot of resistance above price, and you can see what price has been doing. Very indecisive yesterday, big spending top. RMO is still below zero line. MACD is above, hence the reason why we've seen price pulling back. So if we want to see price moving, if this to be positive for sterling, we need to see the 23.6 weekly being breached, and then we could trade towards the monthly or the major resistance level, which is 95 pips away. However, this is to be long-term supportive. We do need to see the 23.6 and the monthly being breached. Each time she's moved into the 48, the 14, this particular support here, she's always bounced. So if this is to be a genuine bounce, we need to see this 23.6 here being breached as soon as possible. Move to our 4-hour time frame. You can quite clearly see now how resistance this 23.6, the weekly support February retracement has been for this particular pair. It's trading between these two ranges, so I've put a trigger alert for a close higher. There was one close higher, however the next candle didn't close lower than that, so higher than that, so we didn't see a trade. I've put a trigger alert above the 23.6 and below my 23.6 on my daily, because once it's trading within this range, it's very skittish, far too much risk takes place, and you're not really getting a massive bang for buck. So rather see price breaking higher, should look to the highs or back towards the institution, back to the monthly February retracement here as my first target, or break the lows, and then we should see price heading back towards that 14.8500 near term. US dollar Swiss franc. A lot of positiveness for the US dollar recently until Bernanke opened his trap a couple of weeks ago, and sure enough we saw this huge bearish engulfing candle, and as I mentioned on the euro, we had price moving up, the pullback, but no continuation. Breakout, pullback, but no continuation. Breakout, pullback. See that? The breakout, the pullback should have stayed above the 22.6. That failed to materialize, and what happened? Massive bearish engulfing candle. Therefore, the sentiment near term will be one of negativity. Yesterday, in particular, we saw a lot of indecision candles prior to yesterday's candle, but the sentiment intraday was one of negativity because of this major sentiment candle. And sure enough, we're heading towards the area here at 61.8 on our daily fib. So I've taken the current low to the current high we've just recently, and the 61.8, which will be our institution, would be our next potential target, and that is roughly 52 pips away from where we are. Look at the indicator box, very indecisive, guys. And you look at the R-squared, for example, which is telling you where genuine sentiment lies. It's all negative. It's red. So there's no true sentiment here. In fact, there's more negativity here if you look at it in anything, but it's so speckled, and you can see the price is not really doing much at the moment. So if you move to the 4-hour time frame, you can see the institution is moving averages in play at the moment. Now, what you can do, however, is treat this break that we saw yesterday, price support, now the institution, use the 50% retracement on the daily as your intraday resistance level, and look at the 61.8 as your first target intraday. Okay, tight, very, very aggressive trading this. There's 46 pips to the downside. Okay, if you can see that we're in a pullback as we speak. RMO is flat, MACD is just below, but it's consolidative. So hence the reason, ideally, if you're going to be trading this, and this is to be very negative, trade aggressively into the 61.8, take your profit, and then wait for a break and close, and then trade towards that long-term support and resistance level to the downside around the 92.670 mark. From where the 61.8 is now in the daily to the weekly fib, we're looking at 97 pips. So you can either do one or two things: be patient, wait for a break and close lower, and then trade for the 97, or be aggressive and look for a nice bearish engulfing candle on the hourly below the institution. Start looking for the R-square to complement the selling, and then target the near-term 61.8, which is 46 pips away. So you can see the high, swing low, swing low. We should be seeing some sort of action in this area. There's a lot of news out this afternoon for the US market, so could that reflect? Or we also got this morning at 10 a.m. GMT, we got the economic expectation figures for the Swiss franc. So either one of these things could move the US dollar or the Swiss franc. So just be aware of that when looking at opportunities. Last pair of the day, the US dollar Japanese yen, as I mentioned, very similar to the US dollar Swiss franc. Price bouncing very, very strongly on a major monthly fib here, and heading towards a weekly breakout, the pullback, and then the continuation up towards the 50% 50% fib of the monthly breakout, the pullback, and then the continuation up. However, it's running out of steam here, and then we saw this bearish engulfing candle after what happened with Bernanke, and that's taken us back below the monthly fib here at the 50%. Now we've seen the pullback, and then yesterday's candle looks very much like a bearish engulfing candle at the underside of a price support. So now if you're seeing a bearish engulfing candle at the underside, that pretty much tells you it's more of a negative stance candle. However, you look at the Asian session, we're seeing a lot of buying coming through. But as long as it maintains below the 50% retracement here, that becomes our intraday resistance level, and we should be looking at that as a potential negative stance. However, you can see intraday, a lot of positiveness, but the R squared is red. We want that to be blue because then it's telling us it's genuine buying sentiment. So as long as it maintains, for me particularly, as long as it maintains below the 50% fib, then we should be looking for opportunities to sell. So look for shorting opportunities here. 4-hour candle, you can see the positiveness over the last 8 hours, going into the 12th hour here. Price is moving higher, and that is after price has failed to break this consolidation support over here, which is also above the institution. So still, you can see the candles are still positive near term. However, we have a red arrow. 20 and 50 are above price, but the most important thing is the institution is still above price. So that's going to be our intraday resistance level. That's got to be breached for us to even contemplate looking at the prior high here at 101.466 is our first target. Ideally, that's what you would like to see, but as long as it maintains below 50%, there's always likely for price to be negative. So be aware of that. Look at the overall sentiment over here. You can see that there seems to be negative sentiment on our intraday. Our long term is still positive. However, we're seeing a lot of negativity here, and the R squared is complementing that. Here, the R squared is not showing any true directional here. So very indecisive, and we're in a consolidated range. And you look at the intraday, you can see that the R squared over here on our 15 and 30 minute doesn't complement the buying sentiment that we're seeing right now. So is that a genuine fake out or fake move to the upside? If it is, as long as it maintains below 50%, then there's always going to be negativity involved. So be patient in this particular pair. It's far too risky to trade now rather wait for a nice bullish engulfing candle close higher, then look to see if there's any opportunities to look for longs, or wait for a bearish engulfing candle close low at the 50% chart to confirm that we should be looking near term back to this prior support and resistance level here at the 98.65, or back to the institution. Get below that, then we can target our weekly fib lows here, which happens to be a major support and resistance level just below the 97.3100 mark, and then to the downside, which is our monthly fib target, which is below the 94. So there's more than enough here. Just got to wait for the confirmation candle, guys. That's it. Done. 30 minutes. Please, if you are using this particular template, please back it up with some money management rules. Follow the rules of the template in particular, guys. Very, very important. Okay, it's very important you understand the rules of the template. If you are interested in this template and any other of Serene Education's education, please drop us an email at info@sereneeducation.com, and we'll get back to you as soon as possible. Otherwise, keep it simple and have a fantastic day. I'll catch you guys tomorrow morning. Until then, you guys trade serenely.